It is an all-time high, 12,111, 12,110 now on the Nifty. So the previous high on the Nifty has been taken out.
We've scaled back from those all-time highs that we saw for the Nifty.
Almost 50 points off the day's high on Nifty now.
It's green across the screen, but the market is a tad bit off the day's high. Very strongly. Remember, 12,132 is the all-time high, so we're not too far away from that.
Bulls maintain the momentum on Dalal Street. Sensex ends above 41,000 for the first time ever. Nifty and Nifty bank indices also end at record highs.
Yes Bank is the top Nifty gainer. The bank's board will meet on Friday to finalize its capital raising plans. Sources tell CNBC-TV18 that the deadline for binding bids ends today.
Infra stocks tumble after Macquarie report raises doubts over projects in Maharashtra under the new government. Road Minister Nitin Gadkari's comments on government's inability to invest further in infra also dents sentiment.
Financials rise on the hopes of SOP's first stressed real estate projects. L&T Finance, Indiabulls Housing, Canara Bank and Union Bank of India are some of the key gainers.
And Cipla falls 2% after the US FDA, the drug authority, issues 4 observations for its Patalganga unit. On the other hand, Biocon gains after its supplemental application for a drug called Pegfilgrastim gets the US regulators' nod. Those were the top 5 headlines from Dalal Street on a day when the bulls were completely in charge. Welcome to Markets Today, the show where we tell you all that happened on this, during the 6 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. Good day for bulls, right? I mean, 70 odd points on the Nifty, and it kind of creeped up because till about 132, 230 even. I mean, we were trading with about a 30, 40 odd point bounce, and then the gains doubled basically towards close. It's a packed show today. We catch up with Samir Jasuja of Prop Equity, who runs us through the overall real estate picture, more relief expected from the government. Ashok Tyagi of DLF joins to tell us about their take on the benefits of the government's sort of stress fund for real estate companies. We also get you market opinion from S. Krishna Kumara Sundaram Mutual Fund, who feels that the sluggishness in auto companies will persist. Also with us to decode, of course, the day's trading action in the near term is Mitesh Thakkar. Thanks very much for joining us, Mitesh. And of course, before we get you all that opinion, as always, let's spend 2 minutes talking about the day itself, how we started, what were the pulls and push, what were the pulls in all directions. But the direction was mostly up. There was never any serious doubt about the direction. Lata.
Well, it's a global liquidity rush, a global adrenaline rush, if you please. That's keeping most of the equities high. Risk appetite is strong globally. Liquidity plus growth expectation. And, a rising tide pulls up all boats, including Indian boats. Usually, I mean, in India, of course, it's now broadening from just the Nifty to mid-caps also doing well. Today, the mid-cap index is up 0.7%. The point to note is when it's a liquidity-led rally, the rally comes first. The justification is always post facto. And there are enough reasons. One big reason is that some SOPs are coming for the realty sector. The real estate stressed fund will take off, and there will be more for those stressed companies. You know, if the realty stress is solved, then NBFC gets solved. When NBFC gets solved, banking stress gets solved, and they will start lending. So, you can extrapolate that as an overall macroeconomic positivity. And then, of course, even micro stories, Z-deal got done. It looks like, Yes Bank also has exposure to realty. If realty is resolved, Yes Bank is in a better position. It also announced that it's going to raise capital. That was a show of confidence. The rally came. The reasons came later. But anyway, which
It's a good way to put it. Prices lead and reasons follow, as they say. So these are the prices which basically moved. The sectors which did very well were the PSU Bank Index, the auto stocks did well, and consumer stocks led from the front. So those are the 3 strong gains. I mean, not very much down actually. It was a sector or 2 here and there, but marginally so. Actually, the mid-cap index was up, about 0.8%, but the small-cap index was absolutely flat. And hence, the overall market breadth wasn't reflecting that 70-point Nifty gain. It was very, very closely sort of tied. Okay, Nifty gains coming through in Yes Bank, Ultratech, State Bank of India, Maruti, Hindalco and BPCL. There was UPL, ONGC and Coal India, which did very well as well. So, I mean, actually, it was across a range of sectors which participated. There was not one HDFC or HDFC Bank or RIL. It was pretty broad participation, at least in the Nifty. What was lower today, Bharti Infratel. I mean, Bharti Airtel itself is a little sort of uncertain now after that Committee of Secretaries for Telecom Relief was disbanded. Cipla and L&T were the other losers today. The broader gains coming in RBL Bank. Biocon did well. We'll discuss this in detail with Ekta. L&T Finance, Ujjivan and Equitas. There was Credit Access, fairly recent listing. HEG, Graphite India. Adani Green continues to do very well. TVS Motor, Torrent Pharma, Godfrey Phillips were some of the other names which actually did pretty well. And of course, lower today, as we pointed out in our headlines, I mean, some of the construction names, NCC was down. Dish TV continues to sell off. I mean, 7%, big volumes. And VRL Logistics was something else, which was down about 6% or so. Lata.
Okay, well, with that, let's get some important market opinion. Earlier today, we spoke with S. Krishna Kumar of Sundaram Mutual Fund, and he believes that the near-term sluggishness in auto stocks may persist, but he's otherwise very confident of an economic uptick.
Over the last 2-3 months of this 1,000-point move, you got probably 60-70% of the contribution from about 4-5 stocks, basically the index bellwether stocks. So that's the reason that probably the broader mutual fund NAVs are still struggling to reach a new high. It's just that as the broad rally extends and expands deeper and wider, you will find that many of the portfolios start inching closer to their previous peaks, basically. We expect a near-term sluggishness in the auto sector, be it commercial vehicles or two-wheelers or pass cars for some time. But I think the strength of a recovery and the rebound is what we are building in. So from a preference perspective, we like passenger vehicles as a preferred play, along with commercial vehicles, which are expect to see a good recovery post the first half of next year. At the same time, all of this can turn very, very positive if the government does provide some relief from April 1st for BS6 vehicles, either in terms of a softer GST rate or some relaxation. There is a definite improvement in terms of the business environment, given that the government has stepped in. I'm sure the government will consider the AGR, penalties, etc., more favorably with the timeline. So these are things which could help the balance sheet and cash flows of these telecom majors, which have been struggling. The biggest positive is that the consolidation that's happened in the sector, bringing down to 2.5 to 3 players in the industry, which means that there could be reasonable pricing power for long term. And once the balance sheet health is restored for these companies, that's what the market is playing. And still, stocks are definitely quite reasonably valued, and hence can provide good returns in the medium term.
Okay, that's some big fundamental view coming in from Sundaram. Let's get a technical perspective. Here and now, near term, what should you be doing? Mitesh is with us. Mitesh, thanks for joining us. You were maintaining till yesterday that only above a certain level, either up or down, would you sort of take further positions. With the 70-point move, has that come about? What would you do now?
So my sense is that I think the direction of the trend remains on the upside, but I think the levels of 12, 120, 130 could be important technically, given the fact that if you were to look at the historical chart and draw a trend line on the weekly basis on the index, connecting the highs of 31st August 2018 with the high of 31st May 2019. I think the trend line, which has significant touch points and is some kind of a supply pivot, I think comes at levels of around 12,120, 130. In that sense, I think getting past Tuesday's high of 12,132, 12,140 could be important. I think that could signal continuation. And once we start getting past 12,140, I think the immediate target on the upside would be 12,250, possibly even 12,400 can happen in the short term. So maintain a positive bias. In case we don't get past 12,120, 130 immediately, I think then use or then try to employ buy on declines kind of strategy. Otherwise, wait for a breakout about 12,140 to take fresh long positions on the index with a 40-point kind of a stop loss for the aforementioned targets of 12,250 and 12,400.
Well, thanks for that, Mitesh. But do stay back for more questions. We are going to the second headline now. Yes Bank rose 7% after the bank announced that its board will meet on Friday as earlier promised to finalize its capital raising plans. Nisha Podar is joining us with more. Nisha, any names at all?
Sources suggest that the bank has reached out to several types of investors, including HNIs, FIIs, domestic institutional investors, private equity funds, and even family offices across the world for investments in the company. And a large part of that who are interested are likely to submit their binding term sheet to the bank by the end of 27th November. That's when the deadline ends, and all the proposals will be taken up by the board on 29th of November for the final approval, and then the Reserve Bank of India's approval will be sought by the bank for going ahead with that $1.2 billion of fundraising. And the contour that we are gathering could be with one large investor putting in a bulk of money, but less than at least 20% stake in the bank, and the rest of the investors really conjuring up that required $1.2 billion is what we gather. At the moment, most investors are working with a price which is a 2-week SEBI formula, which could be hovering close to about 70 rupees per share, but of course depends on the price movement. So it's going to be extremely important. And remember, earlier we had reported the only term sheet so far with the bank has been from SPGP Holdings, backed by a Canadian family office.
Okay, getting closer to some sort of fruition in terms of fundraising. Nisha, thanks very much for that. Mitesh, why don't you weigh in on Yes Bank, 68 odd at close, 8% higher. And while you're at it, also just look at RBL for us. Looking good technically?
So, Yes Bank and RBL Bank, both we have had some kind of positive biases. In fact, my belief is that Yes Bank could get into a positive chart pattern, and the immediate target on the upside would be about 76 to about 77. I think that gives it roughly about 13-14% kind of a trading upside from here, and above that I think I would even look at 83 and then 95 happening. So I think the structure is definitely improved for Yes Bank. There are signs of some kind of important lows being made, and at least from a trading point of view the buyer should be on the long side. A similar view is there on the RBL Bank stock. I think we've had positive calls already at levels of around 330, 335, and then again at about 360. I think the target which I've been looking at are in the range of about 385, 390. So if somebody has long positions, my advice would be to trail your stop losses, get them to about 354 levels and try to take profits in the range of about 385 to about 310.
Oh, okay. Thanks for that opinion, Mitesh. With that, we go to the third headline today. Infrastructure stocks like L&T and NCC slipped on fears that marquee centrally sponsored projects like the Mumbai-Ahmedabad high-speed rail projects are at a risk of getting stalled because of a new opposition government in Maharashtra. NCC, as I said, L&T and IRB Infra also losses in trade. In fact, a brokerage, Macquarie, put out a report saying L&T was a frontrunner to bag the high-speed rail project, and it may have been the casualty because of an opposition government now in place in Maharashtra. Sentiment has also gotten dented on infra stocks after Road Minister Nitin Gadkari said at a conclave yesterday that the government's financial position is such that it can't invest much in infra stocks. Actually, Reema Tendulkar is here with a wrap on all this, especially that report from Macquarie. Here's Reema's report.
Well, there are three things Macquarie says you should keep on your mind. First, the possibility of a large farm loan waiver, which could be to the tune of 50,000 crore rupees. And remember, most of the PSU banks would have exposure to the Maharashtra agricultural space. And it's not just that. A farm loan waiver also adds to the moral hazard of the financial system. Secondly, watch for the developments around the infrastructure project. In that, they say there are two projects which are at a risk of getting stalled. One, the Mumbai-Ahmedabad high-speed rail, where L&T is a front runner. And secondly, the Mumbai-Nagpur Expressway, which is currently split in 16 packages. They say that Mumbai especially has seen a lot of metro projects, but those are ongoing, so therefore there is no risk of those being stalled. But there is a possibility that the pace of execution may be impacted in the short term due to longer timelines and approval, and this would be applicable for the regional airports as well. Thirdly, they're saying the Mumbai real estate market may get an additional push because the current dispensation or the incoming dispensation is seen more favorable towards real estate. So we could see incentives to developers to allow early liquidation of inventory or improve the economics of existing projects.
Rima, thanks very much for that. We'll see if there are indeed delays or everything stays on track. But it's a possibility. Stocks took note. We will take a very quick break here, but stay tuned. We are back in a jiffy with more headlines, more opinions. Stay with us. Okay, you're with us here on Markets Today. We're running you through the top headlines. The big opinion of the day, the Nifty ending about 72 points in the green. Good day for bulls. We got through three of the top stories of the day, so let's move on to the fourth headline. Banking and finance stocks rose on hopes of SOPs for stressed real estate projects. Sources tell CNBC-TV18 that the government and the Reserve Bank of India are discussing a one-time restructuring of loans for real estate companies. The rationale being that real estate companies that avoid the NPA tag can access last-mile funding for unfinished projects. There is also a hope that fresh loans given to NPA accounts be not considered NPA from day one. We caught up with Sameer Jasuja of Prop Equity and, of course, Ashok Tyagi of DLF to understand their take on the government's measures to address stress in the system. Listen in.
I definitely do see some of them going out of this stressful situation. But like I've mentioned earlier, and we've come out with some of our reports as well, that 25,000 crores is not enough to solve more than 15 to 20% of the overall problem. With the NBFC funding drying up over the last year and a half, and nobody's really lending to these B-grade developers, that problem is going to get multiplied.
This financial year is a piece which I think we should still reserve our judgment, because let's see how long it takes for the internal processes to kick up. Hopefully, if this fund is run judiciously, it should definitely go ahead with at least solving part of the projects for sure. Obviously, it can be counter-argued that 25,000 is not adequate, but 25,000 is still a substantial sum. And even if like a percentage of those projects get the last mile funding, I think it will go a long way in restoring the consumer confidence.
That's a strong vote of confidence coming from a veteran in the real estate space for the government's stressed realty fund. And with that, we come to the last headline for the day, to the stocks that are in the news. Biocon surged over 4% after its Bengaluru Biologics unit got approval from the US Drug Authority, the US FDA. On the other hand, Cipla ended lower, that's in the red, after its Patalganga unit got 4 observations, obviously negative observations, from the US drug regulator. Ekta Batra is here to wrap up and tell us all those details.
Well, yes, I'll start with Cipla, which was in focus because it received a Form 483 for its Patalganga facility with 4 observations. We accessed that particular Form 483. While the observations look procedural in nature, maybe there was an overhang with regards to the 12 observations issued to its Goa plant, which is still pending. Separately, reports indicate that pharma companies and industry is probably agreed to cap trade margins of non-scheduled drugs or drugs which are not under price control at 30-odd%. While it won't affect the prescription drug market, which Cipla sells under as well, it is the trade generic segment, which is around 20% of their sales, which could probably be impacted because trade margins seem to be higher than 30% within that segment. Separately, we had Biocon, which was in focus as they received a supplemental license approval for pegfilgrastim, which is basically a biosimilar, cancer biosimilar that they sell in the US markets. They're already selling the drug in the US since July 2018. It's already being manufactured by the company. So it's an incremental positive because they've received approval for it from their new Bengaluru Biologics manufacturing facility. It's also a reaffirmation that the US FDA is okay with that plant.
Okay, Ekta, thank you very much for that. That is Cipla and Biocon in focus. Ujjivan Small Finance Bank is all set to launch its initial public offering on the 2nd of December with a price band of between 36 to 37 rupees per share. The IPO is expected to raise up to 750 crore rupees. We caught up with Samit Ghosh, founder of the company, and asked him to explain the rationale behind the valuation that Ujjivan is seeking from the market for its small finance bank. Listen in.
I don't know how much we can speak about the valuation, but that is market determined, you know, and that is the price which the bankers and us arrived at based on whatever the market actually market can support.
Okay, we'll get more details in good time. But for the moment, we have to wrap up on markets today. Let's leave you with some more expert opinion on the state of the economy, the macros and the markets. Manishi Ray Chaudhary of BNP Paribas says that the government is hamstrung by the fiscal situation, and of course went on to say that any recovery will be a slow, gradual grind for the economy.
There are government policies which are being acted upon right now as we speak. There is likelihood of some degree of fiscal stimulus in addition to what we have seen earlier in the form of the corporate tax rate cuts. But at the same time, the government would also have to watch very carefully the fiscal side of the budget, which is not looking good at all at this point of time. So it's a combination of many things. I think the government understands that there is a degree of fiscal push that is needed, in addition to the monetary push that's already coming in from the central bank. But to some extent, because of the fiscal conditions, the government is hamstrung right now. If we do get some of the announced divestments off the board, if we do get them executed over the next 3 to 4 months or so, that could not only add to the positive sentiment, but it could also add to the government's resources, which are so important at this point of time.